Unearned income required to bring in is called active income, while money earned without daily work is passive income. Passive income is money you earn from sources other than your day job. This can include investments in financial products or businesses that generate income without requiring regular work. The taxes you pay on passive income will depend on the source of the money, so it's essential to keep accurate records of your earnings. There are several ways how to build wealth with passive income. Watch until the end because we've listed some of the most popular methods. Number 1. High-yield savings accounts and money market funds. If you want to earn interest on your deposited funds but don't want to put in much effort, money market accounts and high-yield savings accounts are good options. These investments typically have little risk but offer modest returns compared to other investments. The main distinction between the two is that a money market account is often found at an investment company, while a high-yield savings account is most commonly found at banks. It's important to note that not all money market accounts are protected by FDIC insurance, like many high-yield savings accounts, so be sure to research before choosing one. With the average savings account interest rate being a measly 0.09% and the average money market fund paying around 1.85%, it's clear that there is more potential for growth with the latter. This high yield allows your money to grow faster without taking on any risk, making it an ideal choice for those looking to build a reliable stream of passive income. Number 2. Dividend stocks and mutual funds. Dividend stocks have been growing in popularity in recent years as a way to generate passive income. A dividend is a portion of a company's profits that is paid out to shareholders regularly. Make an informed decision with dividend stocks, though they have the potential to bring in high rewards. They can also be more volatile than other types of investments. When exploring this route, consider buying shares of a company that pays dividends or investing in a dividend mutual fund with different stocks that all pay dividends. The beauty of owning various stocks is it helps nullify some risk factors. Number 3. CD ladders. CD ladders are an excellent way to earn a higher rate of return on your money without taking on any additional risk. It is created by investing in multiple CDs with different maturity dates. For example, let's say you have $10,000 that you want to invest in a CD ladder. You could split that money into 5 CDs with $2,000 each and then choose different maturity dates. This strategy allows you to access some of your deposited funds while still earning interest on the rest. As each CD matures, you can either reinvest that money into another CD or cash it out and use it as you see fit. This strategy may also help preserve the value of your money against inflation. Usually, the interest rate for a CD is higher than the inflation rate. The best part about this method is that it's relatively low maintenance. Once you've set up your CD ladder, all you need to do is sit back and watch your money grow. Keep in mind that laddering requires a lot of cash in hand to invest, and that if circumstances arise where you need access to your money before the planned maturity date, early withdrawal fees could be associated. Number 4. Peer-to-peer lending. With this method, you act as a bank and loan money to individuals or businesses in need. One of the benefits of peer-to-peer lending is that it can provide you with a steady income stream. Additionally, you often have the opportunity to choose to who you want to lend money and can even assess the riskiness of the loan before committing. For instance, Lending Club is a popular peer-to-peer lending platform that allows investors to choose from various loan options. It's essential to realize that there is always a certain degree of risk whenever you loan money. if the person you lent it to can't pay you back, you might not get your money back. Consequently, you must take the time to learn about who or what business you're thinking of lending money to. This way, you can be sure they are unlikely to default on the loan. Number 5. Rental real estate. This type of investment can provide you with a steady cash flow stream and can even appreciate in value over time. There are a few different ways to invest in rental real estate. You can purchase a property outright and then rent it out. Or you can invest in a real estate investment trust, or REIT, that owns and operates rental properties. For example, an REIT that owns an apartment complex would collect rent from the tenants and then distribute those profits to shareholders. This can give you a hands-off way to invest in rental real estate, as the REIT will handle all of the day-to-day operations. REITs can be a great way to get exposure to the rental real estate market without dealing with the hassle of being a landlord. However, they tend to be more volatile than other investments, so you must do your homework before investing. Number 6. Annuities. An annuity is a contract between you and an insurance company in which you make regular payments, either in a lump sum or over time. In exchange, the company agrees to make periodic payments to you for a specified period. They provide you with a guaranteed stream of payments. There are a few different annuities, but the most common is the fixed annuity. With a fixed annuity, you make regular payments into the contract. Then, in exchange, the insurance company agrees to make periodic payments to you at a fixed interest rate for a specified period. This can build your wealth with a predictable income stream that can last for years or even decades. Additionally, annuities often have tax-advantaged status, which can further increase their appeal. Number 7. Royalties. These are payments received for the use of intellectual property, such as patents, copyrights, or trademarks. For instance, you could trade royalties for licensing new software to a company. Alternatively, if you write a book, you may receive royalties each time it sells. Another example might be receiving royalties every time you create art, such as paintings or sculptures, that is sold or displayed in public. Royalties are a fantastic way of earning money while you sleep. They typically involve regular payments. Low maintenance is another excellent feature of royalties. Once the intellectual property is taken care of, there's not much else that needs to be done for the royalty checks to keep rolling in. Number 8. Business. Investing in a company and acting as a silent partner can be highly profitable but also very risky. As an illustration, you could buy shares of a small business you believe in and then help it grow by offering advice and support. A business can be a significant investment because it has the potential to generate a lot of cash flow and appreciate value over time. However, businesses are also precarious. They can fail, and you can lose all of your investment. Therefore, it's important to do your homework before investing in a business. Ensure you understand the risks and have a solid plan to protect your investment. For example, you can spread your investment across multiple companies to diversify your risk. Additionally, you can use a dollar cost averaging technique, which involves investing a fixed amount of money into a company at regular intervals. This can help smooth out the stock price's ups and downs and reduce your overall risk. Number 9. Refinance your mortgage. If you own a home, one of the best ways to generate passive income is to refinance your mortgage. By refinancing, you can get a lower interest rate, saving you money each month on your mortgage payment. Additionally, suppose you refinance into a short-term loan, such as a 15-year mortgage. In that case, you can pay off your home much faster. This will save you even more money in interest payments and help you build home equity at a faster rate. Refinancing can save you a significant amount of money each month. Additionally, it's a relatively low-maintenance way to generate passive income. Once you refinance, you'll just need to make your regular mortgage payments. Number 10. Private equity. With private equity, you invest money into a company in exchange for an ownership stake. Investing in private equity can be a great way to generate passive income and potentially make a significant profit if the company is sold or goes public. However, it is essential to remember that private equity is a high-risk investment, as you put all your eggs in one basket. Additionally, good opportunities can be hard to come by, since most companies don't offer ownership stakes to outside investors. Passive income is a great way to go if you're looking to build wealth over time. By setting up your business and financial affairs intelligently, you can create a stream of income that will work for you, even when you're not actively involved. Are there any other methods or strategies that have worked well for you? Let us know in the comments below. Thank you for watching. I hope you have learned something from this video. If you like this video, give us a like and subscribe to the channel. Thank you and goodbye.